Weathering the storm. I think that's the best way I can kind of describe how I'm feeling, at least, living through this little bit of a lull in the market. Hi, my name's Pav, lead market analyst over at Swyftx, and here to just break down my thoughts on the market, give you my opinion. And that's all this is at the end of the day. It's just some educational content, hopefully something insightful, nothing obviously to sort of derive any investment advice off of, but hopefully find it helpful, hopefully find it useful. Like and share, subscribe, all that jazz if you do find it helpful. I am trying to grow the channel, so any sort of support's very much welcomed. But look, essentially today I'm going to cover what I'm sort of seeing from my perspective as to why we've seen this sort of sell-off precipitate leading into the back end of last week. And I guess there are some key macroeconomic factors essentially literally tomorrow. So if you don't catch this video in time, it might have already landed. But I think a lot of things that I'm talking about will still be relevant even after the fact. And you might hopefully take away something from it, you know, if I was right or if I was wrong. There'll be a little bit to learn from both sides of the coin. But essentially, you know, the ETFs have for a long time been, I guess, showboating a lot of the positive price action in the market. Like they've really been propping it up, to be honest. It's been driving a lot of positive sentiment, and a lot of the market cycle, while it might be quite complicated and complex as a machine, how it moves, sentiment is a big part of it in human emotion, right? So, you know, in the last couple of weeks, we've seen data coming out week after day, well, I guess week after week as well, that just net buying from institutions that never could get access to Bitcoin has just been rampant nonstop. You know, I think the fact is within about 2 months, all the institutions have, you know, caught up to MicroStrategy and the amount of Bitcoin they've accumulated over the last couple of years. So it's been quite breathtaking to watch, especially when you sit down and understand Bitcoins and objects of scarcity. We have the halving coming up as well next month, a massive catalyst as well, where literally the amount created halves. That's essentially it. So it's only something that gets scarcer officially. Look, we'll dive into that, the macroeconomic factors. There's some pretty key technical things I want to cover this episode too. So like playing both sides of the coin here, if we do have a bearish outcome or something we're not expecting with the economic data front, it may set up some technical, sort of a bit of a technical schematic leading into the monthly close that is quite significant in my opinion. And I'll be definitely watching out for that. So I'll describe that in quite a bit of detail. But like always, we'll have a look at underlying conditions as well, just around altcoin health, things like that. Do a bit of altcoin analysis towards the end. And like always, it's always good to just look at what the smart money is doing. So I'll dive into some option books data as well. But look, we'll get cracking. You know, we've been seeing this downtrend now. I think it started, what was it, last week, Thursday, Friday? Yeah, about that. It's been about top to tail, a 17% move. And when you look at, I guess, some of the sell-off events we've seen on Bitcoin over 2023, 2024, 20 to 25% has been the maximum range that we've experienced in terms of dips. So like if we look at even just historic dips that we've had in recent times in this uptrend that we've been in, this is pretty much par for the course. And you can see here this little blue line I have here. It's a 200 period moving average on the 4-hour chart I have here. So quite often by a lot of traders, investors may be referred to as a pretty good level for higher time frame resistance, especially when the market's trending. So a lot of things that are happening are relatively healthy, I guess. And, you know, even looking at some of the more macro news in terms of what's happening in the space, you know, MicroStrategy is still at it again, you know, whether they're lunatics and they're finally going to unravel themselves, or they're just that confident in what's to come in terms of the Bitcoin price exposure and how limited it is. And they understand the supply demand dynamic of it all a lot deeper than any of us really know. You know, they're accumulating even more cash and capital by selling more of their senior notes to get more Bitcoin. So, I mean, that's all happening. I think they even put through another purchase only yesterday as price was falling. But someone that wasn't buying when the prices were falling is, like we mentioned, our friends over on the Bitcoin ETF front. So this is a table that's free to view, farside.co.uk. And quite simply, all you need to pay attention to is this very far right column, the total. So we can see here that the last 2 days have presented us net selling rather than buying, which really we've only seen one-way traffic for quite a bit of time now. You know, we've seen some really, really huge days where, we had the first $1 billion day of inflows for Bitcoin, and now a few days later, we're experiencing, that demand's not there. So it might be confusing for a lot of people, but I think a lot of this is potentially driven from just a general pragmatic de-risking behavior leading into some pretty key economic news. So to touch on that, really what we've got coming out tomorrow, 4 a.m. Australian Eastern Standard Time, is the federal funding rate in the US. Now, this is a big deal. I've got this open here. You can see historically what interest rates have been in the past. We're kind of in this period now where we haven't seen rates as high, since 2006 to 2007, 8. And essentially what everyone's sort of waiting for to some degree from a sentiment point of view is those rates dropping. Cash gets cheaper. Historically speaking, equities, crypto, all those sort of things generally tend to boom during these periods of time. Now, it's not guaranteed, but theoretically speaking, there's more cash in the system. That cash gets deployed into on-risk assets as opposed to sitting in things like bonds where you're earning income from interest rates. So if those interest rates are dropping, theoretically, it's less attractive than on-risk assets. So what basically comes out with this meeting is a decision on the actual funding rate. But more so than that, there's also the release of economic projections, a statement, as well as a press conference. And a lot of this actually does come down to a lot of the tone of these questions and answers that they do in the press conference. The statement itself is usually pretty mundane. But any hawkish or sort of dovish, so bullish or bearish, sort of sentiment towards in the attitude towards interest rate drops, that's going to be a big part of, I think, what a lot of people are sort of hedging their bets as to how much capital to deploy. Is it worth potentially for some of these larger organizations to throw cash in the bank because times are uncertain again? That's pretty much what we're waiting to see from this key event. And these economic projections are basically that. So to sort of frame what's happening this month specifically, you may have seen it in the news or been following it yourself, but two pretty key inflation metrics that the markets do follow when it comes to leading up to these interest rate decisions. They've all got data points, right? And we can just track two in today's catch up, like the PPI, so the cost to produce things for producers, so producers price index, and CPI, the end cost to consumers. Is the cost for things that they're purchasing going up or down? So in this month, we've seen higher than expected data for both PPI and CPI. And then the previous month to this as well, last month? We saw the same thing, right? So they held rates last month, and the general messaging was if data starts to improve, then that's when we'll look to reduce rates. But the way that they saw the economy theoretically was that there's still more work that needs to be done. That's kind of just a very mundane thing they've been saying. But yeah, essentially just wanted to show here again that last month we had a similar sort of pattern where we did see rising inflation again. So this kind of sets up the sort of tone that, right, we've not only had one, but now two consecutive months of inflation increasing. And it's been made very apparent that rates won't drop until these numbers come more into line. So what basically, in my opinion, I'm looking for in this outcome is this still in line with their current modeling? Or has something shifted? I think what the market's pricing in right now with Bitcoin is just general healthy de-risking ahead of the market decision. But this basically for me is the market also pricing in the worst case scenario to some degree. Like not all, I guess, the absolute worst case, but a pretty bearish case scenario if something were to happen. But again, if something were to happen that's not expected, say, for example, they come out to say that more work needs to be done, or maybe the expectations of how much they would look to reduce rates this year, because they do actually give like a dot plot that sort of sets their expectations or benchmarks for 2024, 2025. If that shifts in a meaningful way, in a way that rates won't drop as soon or as quick or as much as what people had been told in the past from this committee, that's an example of something that may not be priced into the market. And that's all, I've mentioned on this channel before. These key economic data releases are not meant to be complicated. It purely is a case of what's expected. That expectation is priced into the market. So if something happens that's unexpected, that's usually what causes the volatility and whipsaw and unexpected moves in the market that we can't foresee, right? Like no one can foresee that. So for me, in a nutshell, that's kind of what my explanation on why the ETF flows have dried up in most recent days. I mean, you could say Fidelity even yesterday with price falling, they did do more volume of inflows than they did the previous day. So there was that sort of buy mentality still present. But yeah, I think a big one will be the next 2 days. Next 48 hours, if we still see this anemic activity after this Fed release of data, and the data is leaning on the side of more hawkish, I probably would have more cause of concern. But that's kind of what I take from it all. And we can even look at something like this tool here from CME Groups. It's a prediction tool, I guess. How are people forecasting, or investors and traders forecasting their thoughts on what the likelihood of rate drops are? Middle of this year, essentially, is where they're sort of expecting rates to decrease. So, that's kind of what we'd be looking to play to. Like, we're talking about expectations again. That's what's expected. No one's expecting a rate drop this month. No one's expecting a rate drop in 2 months' time. June seems to be the current consensus on when that could happen. But this does shift and change with time. So it's just how it looks now as a snapshot. But sort of like I mentioned earlier, like there's still these good news articles or tailwinds blowing for the crypto space from this sort of TradFi market. You've got BlackRock even saying that they're further looking into further tokenization of securities and bonds and further digital assets to improve ownership rights and etc. Like they really are sort of doubling down on crypto as a technology to solve a lot of problems. So, it's not like they're going to be quick to mark down and exit crypto in any means at this stage, it looks like. The other thing we can do to sort of forecast or look at what dealers and traders are sort of speculating is to look at options chain data. Now, we looked at this last week as well, and it shifted quite a bit, only because we are nearing the end of the month, and a lot of these option contracts do tend to settle the closer we get to the end of the month. So for some perspective, when we looked at this a week ago, the majority of consensus was sitting at 80K was the upper band if the market got quite volatile, that we could hit that pricing. That's now shifted to a range of 60 to 68 grand. So that's kind of I guess, if the market remains volatile, what the smart money and the dealers are expecting price to sort of fall. It's getting towards the end of the month, so this data does become a lot less relevant. But what does become relevant is we can look at the next month's data. So we can go to the end of next month. The current gamma cloud sits at 63 to 69%. So generally speaking, smart money presently is still thinking the range that we hold for this month is likely what they're betting for next month. And then we can go fast forward again to the month afterwards, so the end of May. That's when we start to see probably a larger spread here, but that's normal when we've got a bit more time to go. But the upper range is still getting back to that 80 to 81, 82K. So what that tells me is that even though the targets have shifted potentially this month and next month for smart money, they still foresee that strike price as some sort of significant point that the market might reach with enough time. So that's still something I'm tracking quite closely. But other than that, if we look at Bitcoin's price action, I'll just turn off that moving average. It looks a bit yucky. I did mention that there are a few key things that I'm looking for right now in terms of bullish or bearish activity. I think quite simply the bullish scenario from here for me is that what we're seeing currently right now is some form of descending sort of pattern. Usually when you do have a move like this, there is two things that happen. When you're around the midpoint, it often acts as a decision point, like we've talked about in the past. And, you can have two things happen: goes up, goes down. So I think this is where the key news catalyst comes out. The market will be able to choose a direction and start to price it accordingly. So potential bullish sort of scenario from here, if we do get some, what the market's expecting to hear, and the furthest downside had been sort of priced in, and now we're looking to resume the uptrend. Something like this potentially could play out. Like not exactly that, but something close to that. You could also get something ridiculous like this, and then that might result in a few weeks of just price consolidating as well. Like there's too many scenarios to really map out and sort of say this is exactly what's going to happen. But they're two upside scenarios that I'd look at right now. There's still the chance that we do get a result that is somewhat expected, but there are caveats to maybe the way that data plots and etc. go, and all of a sudden, targets to scale back from what was expected previously, and we do see some sort of negative sentiment wash across the market, and we do just see something like this. I could see that playing out too. This level that I've drawn out here is of some significance to me because when we look at, I'll just delete everything. I'm probably going to regret that, but that's all right. When we look at big moves like we saw here, we often leave these areas known as gaps or fair value gaps, and they can often be areas that get tested again before we're able to go higher or lower. But I would say one thing to take away from this is it's not always the case. Usually on lower time frames, it's quite frequent, but I think with Bitcoin and the way that there has been that supply-demand complex, or I guess supply-demand curves being quite skewed for some time now, especially this period when we were having the ETF being marked up before it got listed. Sorry, that was back here. That was that period there. There are certain areas where we just never really went back and tested some certain levels that, in a potentially less demanding market, we might have gone back and tested. But that's an area of interest to me that we could come back to, test a midpoint, the same way I've spoke about midpoints with ranges before consolidating and moving higher, or the opposite can always happen. You got to think of both things, right? You could have a potential markdown. But that, from a weekly point of view, is a pretty significant level for the bulls or the bears. That's probably one that should be likely defended, or there'd be some sort of price action to look at there. But right now, I do think we're operating in this quite large order block. I don't quite like to draw them that large, but that's just unfortunately what I currently see. It's the last low before we broke higher. This being the highs that were broken, that's the last low on a daily chart. Sorry. So for me, this is my description of market structure when looking at a trend. So a break of that would be quite devastating. But what you could see is, something like, a candle like that, which ends up here, and we test that mid-range, close back above, and everything looks like it was quite intense, but at the end of the day, it settles out quite well. The bearish scenario right now is being 10 days away from the end of the month. We are putting in some not so nice price action. So closing above these previous all-time highs, I would personally consider that as a pretty bearish price close, just in the simple fact that we're looking at a free market trading that's not willing to pay a premium above these levels. And the monthly level is probably the one that gets respected the most, categorically speaking. So, if there is a sentiment that the market is perceiving this to be too high of a price at the month's close, that's when you start to see potentially larger pullbacks coming in. And you might look at previous highs as areas where price could bounce, and that's where it's not unreasonable to think 48 to 37k could be a reality. Like I do think it'll take quite a bit to get there, but that's one potential technical setup that may precipitate a lower price like that. So we'll just have to see what happens. But the one last thing I'll sort of touch on is just underlying general conditions. The US dollar index is something we've been tracking as well for quite some time now. Been operating in somewhat of a pretty standard range for a few weeks now. This was looking quite toppy, I guess, last time we checked on it on a weekly time frame, failing to be able to break higher than the previous highs. But now we're starting to see a bit of a rally on it. And for me, whether or not this is a bullish or bearish, maybe just a bearish retest, we won't know. But we're kind of in this vicinity now where, if this was just a simple bearish retest, which we should expect, or the market does normally anyway, it could just simply be a move higher before a move lower. And that would sort of be confluent with the idea that the trend's back on, essentially, for on-risk markets like crypto. Crypto markets generally do perform better when the US dollar is not as strong. But at the same time, as we talked about, if something were to be spooked from the interest rate front, or just from the general economic climate and condition in the market, this might set up the next springboard to head towards this sort of overall range mid area as well, which is a total possibility. That can't be discounted either. So simply just the recent high in 2022, I guess somewhat recent, not really that recent, but it is the most significant high, first low. That would set up the next potential trend as well. And that's when you might be looking then for distribution, which could then set up a reversal here into the back end of 2025, 2024 and 2025. So that's a real scenario that we won't know until it happens, right? But that is kind of like, I guess, a quick view of underlying conditions there. Another thing to point out too with Bitcoin dominance, to get that really sort of, elated altcoin cycle, we do generally see Bitcoin dominance first top out leading into that sort of behavior. And looking at it from purely a percentage-based sort of front using Fibonacci, we are basically sitting from the most recent high to most recent low. We haven't even crossed this halfway sort of golden pocket region. So I still think that there is personally some room to move higher still on here. Now, whether that's sort of precipitated by the whole altcoin market flooding into Bitcoin on the back of a massive sell-off, or it's a Bitcoin led rally, it still is a flip of a coin, right? Like either of those two things can technically result in Bitcoin dominance rising. So I just want to mention that as well. And looking at this on a monthly time frame, I would say, there's still a pretty significant cluster of highs and lows here, sort of around this general area. I mean, you can only really do TR on this so much, I believe, but there is, just generally probably a probability of that going a little bit higher. And looking at TOTAL3, crypto altcoin market, the key range we were waiting to hit has hit, or that I was waiting to see has hit. And we have put in a, I guess, not so strong weekly close as well. So it's a typical sort of reversal candle as well. So again, it's just sort of waiting on what does Bitcoin do next. Likely will sort of govern what altcoins do. And there's nothing to say we don't just get a period again of this going sideways before it can expand again. So maybe that's just what we're setting up as well. Or alternately, there's a bit of a downside play here coming, or we're just seeing continuation, but just waiting to reset before it goes again. It's all just if this, then that scenario. So we're kind of just sitting in that, no man's land, right in the middle of the storm, just waiting for it to either pass or keep going. That's pretty much the best way to describe it. But other than that, I think we can just dive straight into some altcoins, sort of give my take on them. One thing I will say that is quite helpful to do during these periods of time is to hop onto your favorite, coin screening or tracking website. And when you do see big retracements in the market and you see Bitcoin ever so slightly recovering, what I personally like to do is to come onto here and just look at, hourly performance on certain assets. And generally speaking, when there's relative strength on certain altcoins, as Bitcoin's bouncing or moving to the upside, this is where you can sort of build really, really rich, really good watch lists, because what you're seeing is strong conviction, strong market making from whoever it might be, that certain altcoins are, of demand, of value, right? Because that's what it is at the end of the day. It's basically an advertisement saying, the price is strong on this asset, right? So what we're seeing in the last 24 hours, even after all of the selling that we're seeing, certain assets are still up, right? Like that's potentially not something you'd think. But yeah, we're seeing optimism, Arbitrum, so layer 2 scaling solutions on Ethereum, PEPE, one of everyone's favorite frog coins, Phantom, Starknet. So massive theme around infrastructure tokens here. And then we're seeing some strength from AI, and interesting for the first time that I've noticed it, gaming tokens as well. So Gala showing up on the list as well. And Celestia, probably one of the more newer modular blockchains, that's showing up as well. So for me, I would probably, I have already taken probably the first 20 of these and I've added them to a watch list, and I'm just sort of watching them technically as well from here to see where we go. But on that note, we'll actually just start looking at a few of those assets right now. So Optimism was one that we were looking at. Here are some massive squiggles from last time we looked at Optimism. Looks like we didn't get it too wrong. There was a ascending channel here. Went to the upside of the channel, broke back in. So now it's just back to a new decision point. So let's just start from fresh. Cool. So yeah, I think I mentioned it before. What I like to do is start on just a line chart sometimes when we do have just a lot happening on a chart. Use the closes. I'm connecting basically the first low I see, oh, that's terrible, to the next subsequent low before we broke higher, and then connecting it to the high in between. So that's basically what I would consider like my first deviation. I then would look for a second deviation and then look at areas like here, areas like here, and areas like here to see if there's buying or selling. And the way I look at buying or selling is if there's a dip, is it getting bought up? It's pretty much it. So I could see that there was some accumulation there. Just delete that because it looks like too much is happening. At this point, when we got to the next decision point, the price did move higher. So I guess, again, continued buying. And again, right now we find, I guess, a trading range on optimism that looks like this. So we turn it back to candles. As you can see, it looks a lot busier, but we can see we've just got general areas of interest where price is moving and respecting. So that was our trading range that we spoke about. We've deviated here. We've gone to the middle, decided to go higher, had an attempt to break out. But again, if Bitcoin and the rest of the market is going down, something like optimism or any altcoin likely isn't going to continue its breakout. And essentially just seeing it a markdown. Currently finding support back down at the same bottom range here. So, I mean, the way I'm sort of just interpreting that is, should we continue to move higher here and start to move away from this midpoint? This same fail breakout that we had, we'll probably retry, very simply put. But a bearish scenario from here also is we start to put in what would look like it's trying to break out again, but just failure to do so multiple times and then starting to break down, right? So that is again how I'm looking at this one from a bearish perspective as well. Another one that was on the top movers then was Arbitrum. So another one of these layer 2 scaling solutions. So looking at on a weekly time frame, we'll chart this one a little bit different. Take this previous high. We'll take the most significant low after that. So pretty similar story. Looking at this on a daily time frame here, we had this just general range forming here. We had the range break. We then have a sub range here that has now broken as well. So for me, again, like I talked about it before, we see that throw out, come back to the midpoint, and then the decision is made, and the decision in this case was to go higher by the market players. Yeah, the current range that it's sitting at is up here. So really it's sitting at the bottom of that channel. Pretty interesting spot. So you really want to see the same thing that we saw back here, back in October 2023 and also November 2023, kind of a similar technical setup. But if we were to go from here, move towards this mid-range, see a period of consolidation, and then it decides it wants to go higher. That's what would look, I guess, from my perspective, how I'd see it set up for its next leg higher. And then the next decision will be up here. As you can guess, we've talked about that too. Potential bearish scenarios is essentially at any of these points, it not doing that and breaking down. So it doesn't have to wait till it gets here or gets here. It can happen at any point. So again, it could do anything, right? But they're the two decision points, and you could theoretically look for price to get maybe towards this region here. But, you know, I personally am looking at this as maybe a spot to maybe do business if I'm thinking that the market is going to price in higher prices after this. And, you know, if I were looking at this, that would be an area that would invalidate this, because if we start breaking lower, that means that this setup is not valid. Very, very shortly put. So that's Arbitrum. FET, I think, has been catching, I guess, a lot of interest, obviously, with the AI theme that's been apparent for quite some time now. But most recently, I think there's a NVIDIA conference going on right now too as well. So I think a lot of these altcoins, they're just potentially people speculating that there might be some big announcement from one of the big crypto players of some sort of partnership. I think everyone would be praying for that because I guess you could argue right now that the problem with AI and crypto is that there is no real use case until proven otherwise. But looking at this chart, Pretty clean setup again. If we just go from a line chart again, same sort of theory that we've been talking about this whole time, taking the high, next subsequent high, the low in between, waiting for a deviation. We've had the deviation on both sides. We're now at that decision point of the channel. And this is where we get to see if the market wants to push it higher or lower. So looking at the structure there on, if we move down to lower time frames, I guess what's notable for me is we're seeing higher lows and so far just starting to put in higher highs. So this could be the start of an uptrend, but at the same time, if we see the same thing here that we saw here, that could just be a fake out again, like the market wants to break higher, but if the general underlying conditions are quite bearish or hawkish, we might just see that breakout fail, and that's when you start to see a bit of a markdown on an asset like this. But you know, things that I quite like from a technical point of view is seeing previous levels get washed out and bought back up. So I can see there's these significant lows back from March 2024. Excuse me. Don't know how I got that. But yeah, what I'm seeing from there is there is points where the market is given an opportunity to buy at, I guess, what is a perceived, I guess, low and discount region potentially. And then for me, it's putting in a higher high. I quite like to see that. So that for me means that if the underlying conditions maybe were better, yeah, that could have been where the breakout started. But I mean, this is where, yeah, we did see that sell off, and this has followed suit too. So that's an interesting one as well. PEPE, I haven't really looked at this chart in a very long time. I've been following Bonk and Whiff a bit more, to be honest. But yeah, looking at this on a 12-hour first, let's take a look. Very decent breakout. Okay, so from here, again, just doing a bit of range analysis, I would take this high, the most significant recent low, I guess, which would be that one. Maybe if we go on a 4-hour time frame, might be a bit easier to see. Yep. So for me, that's significant just because it's put in attempted to put in a higher high there. So that's the bounce I'm using. Yeah, still just starting to reclaim that region again. So, you know, invalidation for this would be a breakdown here or a new low under here, essentially, you could just say. So a new low under there. But if you were playing this to the long sides, or if I was, I should say, the next target for me is this midpoint and this top point. And what I'm wanting to see is a new high above here. So a potential scenario is if everything from a underlying condition perspective looks great, new higher high forms, we start to consolidate and compress under this midpoint, price attempts to go lower but gets bought up, so accumulation. And then we start to build that next leg towards these previous highs and then start to do the same thing once we get up there that we did down here. That's what I see with this one. And then bearish scenarios, again, they could occur anywhere, anytime. So you could get to this same region, consolidate, compress, but fail to break higher. And then you start to distribute, right? And then you start to do the same thing and come down to here and do the same thing again. And you're just watching and waiting to see that happen. Again, too, like if we fail to, even in the short term, make a new higher high and get over this blue line, that's usually something I see quite frequently, and that starts to form the rollover like that as well. And that's when you look at previous lows, like this one here. That's a very interesting support resistance area as well. Previous high, previous low. Wouldn't be surprised to see that come back to there if underlying conditions didn't look better. That being said, so that is PEPE. And to finish up, STX, while this wasn't on the last 24-hour movers, I noticed this one moving quite a bit in the first hour after the big dip was recovering. So I thought I'd cover STX as well. And also just fundamentally, I quite like this one. Bitcoin DeFi, which we've never seen as a theme or narrative, but I think with the advent of ETF buying and just in intrinsic value being proven in Bitcoin, we might see the Bitcoin DeFi narrative take off, and this is a scaling solution for Bitcoin. But essentially, same narrative that we've seen a couple of times now, taking that high, taking the next significant low, just drawing a range. We've seen basically the market look to buy up that point there. We've put in higher highs, so that's a good sign for me. And now we're failed to have that breakout, obviously, just during that same period we had that sell-off from last week. But now we're starting to see, again, a reclaim of that range. Next decision point for me is there. and then future decision point there, and then we might start to see a markup. And another thing you can do when you're trying to work out, when I'm trying to work out where these markets could be ranging, is to use something like Fibonacci extensions. So I'll just remove this so it looks a little less busy. But if I were to take the most recent high, which is actually this one, not that one, map it to the most recent low, you can actually use something like this to look at certain Fibonacci levels which certain traders or investors are looking at to be reclaimed. It's just like general level-to-level trading. And then also look at the 272 ratio and the 618, also known as the golden ratios, that's specifically the golden ratio, as targets, right? So what I normally do when I'm looking at Fibonacci like this is I'll want to see accumulation above the 0.5, the 0.6. Usually this is the decision region, which is pretty similar to the middle of the range of the other way that I did TA previously as well. And yeah, pretty simply, just want to see accumulation. And then that is, I guess, my sign for confirmation. And then I would be targeting this level and then this level as future targets. So that's another way to look at this market too. So potentially a 23 to 34% move based on this current range. So that's another way I look at the markets as well. To give you like another example of that happening in the past. If we look at, I think I can do this. There you go. That'll just get rid of the mess. Well, some of the mess. We'll get rid of that one too. We were in this trading range previously. To give you an example of what that looks like or what that could look like, this was obviously a bit more of an explosive move. But yeah, again, once it was proven strength at this golden pocket, the targets were, basically this level, and we can see just by maybe sheer chance, maybe sheer luck, we hit those pretty cleanly. So that's a method you can use on any time frame, any market, when you just take into account the underlying trend. Whew, that feels like a lot. But I hope that was helpful. And yeah, the timing of this video is not great, obviously, with the big news dropping tomorrow, but likely I've given enough scenarios and options that no matter what the outcome is tomorrow, you're kind of armed with some sort of knowledge of what to expect. And even if you didn't catch this information in time, we've covered quite a few bearish scenarios as well as to what technically could occur, what to worry about leading into this end of month close. And as well as altcoins too, like what looks like potential bullish or bearish key areas on those as well. But look, again, if you like what you saw today, like, subscribe, let your friends know that, there's another place you can come to get some honest takes on how the markets are shaping up. And again, like, it's all about sort of understanding why the markets are moving sometimes to give you a bit more confidence in understanding crypto, which can seem so cryptic at times. But that's what it's all about. Just about learning that little bit more every time to feel more confident. But catch you guys all next time. And surely there'll be a lot to unpack. We'll know what's happening. So I'm excited. I actually look really forward to it. So I'll catch you guys later. Cheers.